Welcome to this essential guide on understanding paycheck deductions. If you've ever looked at your paycheck and wondered where a significant portion of your earnings went, you're not alone. Today, we'll break down exactly what happens to your money between your gross pay and what actually lands in your bank account. By the end of this video, you'll have a clear understanding of every deduction on your pay stub and why each one matters for your financial future. Let's start with two fundamental terms you need to know. Gross pay is the total amount you earn before anything is taken out. This is the salary or hourly rate you agreed to when you accepted your job. Net pay, on the other hand, is your take-home pay, the actual amount deposited into your account after all deductions. The difference between these two numbers can be substantial, often 20 to 30% or more, depending on your situation. Understanding this difference is the first step to managing your finances effectively. The first major deduction is federal income tax. This tax is based on your income level and which tax bracket you fall into. The United States uses a progressive tax system, meaning the more you earn, the higher percentage you pay on that additional income. The amount withheld from each paycheck is determined by the information you provided on your W-4 form when you started your job. This includes your filing status, number of dependents, and any additional withholding you requested. Getting this right helps you avoid owing money or getting a large refund at tax time. Next up are FICA Taxes, which stands for Federal Insurance Contributions Act. This includes two separate taxes. First is Social Security tax at 6.2% of your gross pay. This funds retirement and disability benefits for you and others. Second is Medicare tax at 1.45%, which provides health care coverage once you reach age 65. Together, these total 7.65% of your earnings. Your employer also pays an equal amount, so you're both contributing to these important social programs that you'll benefit from in the future. Depending on where you live, you may also see state and local income taxes deducted from your paycheck. These vary significantly by location. Some states like Florida, Texas, and Washington have no state income tax at all, while others like California and New York have higher rates. Additionally, certain cities impose their own local income taxes. These taxes fund state and local services like schools, roads, and public safety. The rates depend on both your location and your income level, so it's important to understand what applies in your area. Now let's talk about pre-tax benefits, which are actually good for you. These are deductions taken from your paycheck before taxes are calculated, which lowers your taxable income and saves you money. Common pre-tax deductions include health insurance premiums, retirement contributions to plans like 401k or 403b accounts, health savings accounts known as HSA, and flexible spending accounts, or FSA, because these reduce your taxable income. You're essentially getting a discount on these important benefits. Maximizing these contributions is a smart financial strategy. Post-tax deductions are taken after all taxes have been calculated and withheld. These don't provide immediate tax benefits, but they're still important. Examples include Roth retirement contributions, which are taxed now but grow tax-free for retirement. Life insurance premiums that provide financial protection for your family. Disability insurance that replaces income if you become unable to work. And union dues or charitable donations if you've set up automatic payroll deductions. While these don't reduce your current taxes, they serve important financial and personal goals. Let's wrap up with some key takeaways. First, make it a habit to review your pay stub regularly so you understand exactly what's being deducted and why. Second, familiarize yourself with each deduction category, both mandatory taxes and voluntary contributions. Third, consider adjusting your W-4 form if you're consistently getting large refunds or owing money at tax time. And finally, maximize your pre-tax benefit contributions when possible, as they reduce your taxable income while building financial security. Understanding your paycheck deductions empowers you to make informed financial decisions and take full advantage of available benefits. Thank you for watching, and remember, knowledge is the first step toward financial success.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.